Joining us now from the Center for Strategic and International Studies, Senior Fellow for Energy Security, Clay Seigle. Was that an overstatement, Clay, to say that what we just showed our viewers, which is a bunch of red arrows, each one representing, by the way, a ship, the number of ships in that body of water is probably going to determine the path of oil and natural gas prices?
Hey, guys. Good afternoon. Good to be with you. I think that the illustration that you showed basically illustrates a success story when it comes to energy security, and particularly with regard to the safety of energy commodity exports that reach customers all around the world from this very important origin region, which is the Middle East Gulf. That picture that you're showing there could have far fewer icons representing those tankers departing the area if we had seen a total closure of the Strait of Hormuz. But I told you guys last week, the prevailing philosophy in the oil market has been, oh no, the oil halt never occurs. So far, they've been right, and we've seen those flows continuing. I don't think that the risk is completely off the table of lesser types of disruptions that could still impact supply-demand balances, depending on what we see next out of Iran and the region. But the big worry about a total cessation of flows was overstated, I think, because the only chance that Iran would try a move like that is if its own exports had already been halted, let's say by an Israeli bombing, a United States bombing. And if that was basically not in the cards, then a total shutoff wasn't either.
Since Sarat, our guest last hour, Kevin Book, suggested that we could be oversupplied by 1.5 million barrels the next couple of years. So energy investors who have, been looking for one break after another and gotten none of them are now facing this situation where what do they do now?
Look, I think energy is a tough one in terms of long-term durability. We go back to kind of what's going to have future cash flows. Russia's pumping. You've got, the Middle East pumping. We are self-sufficient. So I do think you have to pick your spots carefully. You should still have a little bit of energy in your portfolio, but I think it's more the services side, the Schlumbergers, the technology part of it. But the big oils are going to be hard to own for the next 3 to 5 years. To your point, oil, there's so much supply, and you have a global disruption. We've got 2 wars going on, and you've got oil at $60. Exactly. So it just tells you that when things are normal and, if the economy picks up and there's enough supply oil, that's going to be really good for companies. It's going to be really good for consumers as well.
It does, Clay, make you wonder if the world truly did achieve peace. I don't know what that looks like. Let's all hope for it. Not sure we've ever had it. But if we get it, would oil prices be at $45, $50 a barrel? It seems like that's where the market keeps wanting to push the price.
World peace with all supply disruptions permanently off the table. Interesting concept. Not sure it's the world that we live in, but let's focus Let's focus on the Gulf for a second, because we're at a really important inflection point still. And I'm keeping a really close eye this week on what is the outcome for the Iranian government and this regime that has ruled this country since 1979. And I think that President Trump was correct to point out earlier today that instability breeds chaos, and that might not be the best thing for energy security. Listen, I'm not suggesting we award any medals to this regime. The president was also right last week in calling them out. They've contributed to the murder of thousands of Americans and should be held to account. But both things can be true. Chaos in Iran could give us medium to long-term concerns about energy security from this important part of the world. And chaos is probably not an ingredient that we want in the mix right now. The president has been guiding toward a target of lower oil prices, which he believes will be conducive to better macroeconomic performance. And so that does not go along with future supply shocks. You would want stability there.
Yeah, I think you're right. Clay Seigle, CSIS.